It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast as we rip into the Australian property market and pull it apart with our weekly conversations, talking to the biggest names in real estate right across Australia, looking at the analysis and the trends as well as the predictions. And if your property journey has gone into overdrive this year, you might have one of those positive housing stories that you'd like to share with us. Well, I can tell you, we would love to hear whatever that is. Our voice message is below. It's very simple. Just tap on that to start talking, or you can send us an email. Our email address is myrealestatepodcast@gmail.com. Well, it is a Friday. The end of the working week has arrived. It is March the 6th. And yesterday we had that interesting conversation with Mario Volpe in Dubai. A lot of Aussies are still in the UAE with that uncertainty around the Middle East. And talking about the war, I see that it was on this day back in 1960. The US announced that it would send 3,500 troops into Vietnam. That didn't end well, did it? And you might be feeling the stress of this current war crisis with some of the comments about what might result here in Australia with the fallout. The RBA Governor Michelle Bullock says that it's too early to know how the escalating conflict will impact Australia's economy. So far, the missile strikes involving Israel, Iran and the United States have disrupted oil, and you've heard those shipments through the Strait of Hormuz pushing global oil prices higher. Economists are warning that petrol prices in Australia could rise by up to 40 cents a litre. And Bullock says the RBA had not ruled out an interest rate rise when it meets again. Just what you don't need to hear on a Friday. So let's take you right now to Melbourne and catch up with Richard Whitton from Finder. And good morning to you, Richard. Welcome to the Real Estate Breakfast this morning. Yeah, as I say, the war creating this unease for mortgage holders facing potential rate increases off the back of this Iran crisis.
Well, that's right, Craig. Yes, it looks to be that this war is going to have a very big impact on inflation around the world, and that is the one thing the RBA doesn't want. And if inflation goes up, we're going to see higher interest rates. There really is no way around it.
Yeah, and I want to talk to you especially this morning about the hidden cost of the property boom. Australia's property boom has created huge wealth for homeowners, as we know, but there's this hidden cost that many people don't see coming. It is insurance. And as property values surge, the cost of the insurance for those homeowners is climbing, and it's climbing pretty fast. For many households, the annual insurance renewal is now becoming one of the biggest financial shocks to the household budget. And you guys sort of covered that in a recent piece.
Yes, it looks about 78% of Australians may have had their home insurance premiums increase quite significantly in the last 12 months. It's a really big factor that a lot of people don't consider when they think about the costs of owning property. We've seen property prices grow so much that I think a lot of people have become almost victims of our own success when it comes to these rising prices, because as prices go up, the value of the asset is higher, and it's a much bigger cost for insurers to therefore cover those properties and replace them if something goes wrong. So we're seeing this big increase with the insurance premiums, which really does make the average person's costs go up a lot higher than they might expect.
Yeah, 78% of Australian households, as you say, have seen their home or content insurance increase in the past year. I mean, that is such a big figure. It's almost nearly 4.5 million households dealing with these higher premiums, adding another pressure alongside the rising mortgages. Let's talk about the increase, which isn't coming from just one factor. Insurers are dealing with more natural disasters, higher home building costs and expensive materials. This is just all fueling, isn't it, the problem around house insurance?
Well, that's right, Craig. Yeah, it's really a perfect storm of factors. Building costs we've seen just increased massively over the last 4 or 5 years. Inflation has touched really every part of the economy and every part of the housing supply chain, labour costs as well. So simply, any cost to replace a property just are much, much more expensive than they used to be, in addition to the actual, higher value of the properties themselves. And then, of course, we've seen, natural disasters becoming much sort of more common factor for a lot more Australians, especially in certain parts of the country, parts of Queensland, parts of the Northern Territory, obviously most affected. We've seen the risk factor increase in certain neighbourhoods as well, which just all compounds to make insurance a much, much more expensive proposition for a lot more Australian people.
Yeah, you talk about the national property prices. They've jumped more than 9% in the past year alone. Cities like Perth, Brisbane and Adelaide, the growth has been even stronger. The problem is around insurance is that not everybody is able to afford insuring their properties. So what do? They say, well, this is going to be the casino night. We're not going to pay insurance anymore. Hopefully nothing happens.
That's right. Some people, they just take the gamble, I guess. If you're still paying off your home, you need to have an insurance policy, as part of the mortgage conditions. But once you've sort of had the home for a long time and maybe you've paid it off, no one's really checking. Some people do just decide to go uninsured, which is just incredibly risky. I imagine some people, depending on where you live, that roll of the dice starts to feel a bit safer or a bit more dangerous depending where you live. But it really is an enormous risk. Your biggest asset you'll probably ever own, being uninsured, just leaves you incredibly exposed if something goes wrong. A house fire, an accident. It's probably one of the biggest risks you could take in your life, really, to go uninsured like that.
Had a really interesting conversation last year with Margaret Lomas, and she's a property investor. She's feeling the insurance, and what she's sort of been thinking of doing is actually just not insuring any of her properties because she's got so many of them. She's worked it out that if something happens, she'll pay for it directly out of her own pocket. Now, if investors are feeling it, it's a good barometer, isn't it, in terms of how your average Joe Blow is?
Well, yeah, that's a very interesting case. Obviously, if you've got multiple properties in a portfolio, you can sort of hedge your risk differently, I suppose, to the average person. But if the investors are feeling it like that, the average person is in probably a much more difficult position and with fewer avenues or options to really deal with it as well if you've only got the one property.
All right, Richard, we'll leave it there. Great to catch up on our Friday morning. First time for you on the Real Estate Breakfast. Enjoy the weekends coming up and thanks for coming on.
Thanks, Craig.
Eager to expand your property expertise? Enhance your real estate know-how with us.
And I just want to come back to the comments that I made at the top about the RBA Governor Michelle Bullock saying that it is way too early to know how the escalating war conflict will impact Australia's economy and as a result really hurt Aussies in their wallets. She had these comments to make earlier in the week.
Some people are doing it tougher, as you've mentioned, and that might be people, for example, with mortgages on lower incomes, perhaps, who've got less spare income. There's other people that are not going to feel it quite as much. And in fact, what we know is that there is a large chunk of people with mortgages that, as interest rates have come down, have opted, in fact, to save it. They're not spending it, they're socking it away. The interest rate, though, is a very blunt instrument, as I've said before, and we know that it does work in slowing the economy, but it does impact people in different ways. Only thing I would say to people who are badly affected by this and are struggling to make ends meet is that part of the reason they are struggling to make ends meet is not just people with mortgages. Renters actually are often struggling as well. Inflation is what's caused them lots of trouble. It's the price level. The price level has gone up 20 to 25% over the last few years, and people see that every time they walk into a supermarket or they go to the doctor or whatever. That's, I think, what's hurting people. That's why people, I don't think, are very confident when you see consumer confidence surveys.
Yes, so those consumer confidence surveys are going to grow as the Iran-US-Israeli war continues. The oil is going to be somewhat of a nightmare the longer that this goes on, which is why some economists are warning that petrol prices in Australia could rise by up to 40 cents a litre and maybe even higher. And we don't need this, do we, around the housing market in 2026? I also note that some commentators are suggesting that the market correction might happen for the property market. What do you think about that, a correcting market? I think that once this is behind us in the rearview mirror, the real estate market will continue on its merry way with its trajectory. This is a blip, not a long-term property correction, although the caveat is if this goes on for a period of time, then things can change. And that is when you get big negative consumer confidence numbers, and things could then land in the unknown column.
Let's explore together the power of real estate.
That is so scary as we catch up with Cameron Cusher in Sydney. And yes, let's talk about the new housing supply, because you've got some thoughts with regard to that.
I definitely do. If we have a look at new housing supply, the federal government has this target of 1.2 million new homes over the next 5 years. Well, it's over the next 4 years now. And we're struggling to hit the level of housing construction that we need. We're starting to see more building approvals and starting to see more dwelling commencements coming through the system. But, 1.2 million new homes over 5 years, that's 240,000 new dwellings every year for 5 years. That's a level of construction we've never been able to achieve here in Australia. So we're going to have that deficit. It's extremely unlikely that we're going to go anywhere close to delivering that volume of new housing. But I would say the good news is that projects are becoming more viable. Things like the Home Guarantee Scheme create more demand for housing. Individual states are starting to do a lot more to try and facilitate more new housing delivery. So we should start to see housing construction pick up from here. But in terms of the likelihood of reaching that target, it's very slim.
And if you look at the other end of the scale, I've got some mates of mine that are over 50 and they're on their own. When they upgrade, they don't downsize, they stick with the big house. And I've got one mate who's in a 6-bedroom, 3-bathroom property. It's just him. He's got a girlfriend that owns her own property. But like he says to me, when I finally downsize, this property is going to be worth gold.
Exactly. And that's the strategy, right? So if you've got an owner-occupied home, your owner-occupied home is not just about shelter. It's an investment as well. And it's one of the few investments that's basically tax-free. Obviously, if you buy investment properties, there's taxes on that. You got capital gains tax. There's no capital gains tax on the family home. So a lot of people live in houses that are much bigger than what they need because they know that those properties are likely to increase in value at a much faster rate than something smaller. And we've seen this over time, that house prices tend to rise at a much faster pace than unit prices. So people preference larger houses that increase in value. And then, as you said, when they come to downsize, they're in a very comfortable position.
Listen to expert perspectives with exclusive real estate conversations and supercharge your knowledge base with us.
I still feel, and I felt at the time, quite angry. This is not our war. This is nothing to do with us. And yet we seem to be punished. The emotion was running very, very high. Yes, I've never had to experience this before. We are not being targeted as such. And I want to make that message very, very clear. We are not at war. It's collateral damage.
Yeah, and I guess that after the weekend, Monday arrives, you think, well, perhaps that's going to sort of cool down. But there were more explosions.
Yeah, you're right, Craig. We thought that obviously after the weekend things had actually quietened down and we were going to return to some sort of normality. We heard 3 more loud explosions, which obviously is pointing to the fact that it isn't over. And, we've got these to contend with. Hopefully we won't see any more, but it's a very worrying time at the moment, Craig.
We connect you to the best real estate information across Australia. The Real Estate Podcast.